Right, good morning then everyone as we head into European trade on Thursday the 11th of January. I'll flick across the headlines, see what's going on, we'll jump on to some markets now in a moment. But you see main headline: US SEC, Securities and Exchange Commission approves Bitcoin ETFs for a number of, well, they've approved Bitcoin ETFs, but a number of different companies. You know, you can see down here BlackRock, Grayscale, other funds to track the crypto price. But yeah, okay, a positive for Bitcoin. It makes it a bit more of a regulated way to invest in Bitcoin, and obviously that's a positive for the cryptocurrency space. Not exactly 100% regulated, but this version of investment, an ETF that is approved by the SEC, you know, investing with large companies like BlackRock, makes it a lot more of a safe way to invest in cryptocurrencies. Obviously they're extremely volatile and you can make or lose your money quite quickly, but it's better than going through a cryptocurrency exchange with the troubles we've seen from FTX and Binance over the kind of last year. So positive for the cryptocurrency space, but it doesn't really change much for the actual space itself. Makes it easier to invest, and you're more guaranteed to get your money when you want it. But ultimately, at the end of the day, it's no progress made towards it being a currency or a store of value or any of that. You still cannot use cryptocurrencies to purchase goods and services in around the world. Okay, there's a couple of countries that allow it, but still can't for 99% of places. Not really a great store of value as it's so volatile. It can move lower, it can move back higher. So there's still a lot of the technology behind it is still not used widely across the world. So it's one step forward, which is good, but there's still a lot of work to be done in cryptocurrencies before they really blow up, you'd have to imagine. But positive for the cryptocurrency space. Not much volatility off the back of that. It was kind of expected. The markets have been talked about in markets for a while, and Bitcoin has trended higher off the back of that. So a bit of a buy the rumor, sell the fact kind of thing, if you've heard that statement before. Means that there's not a lot of upside in the immediate aftermath. Apart from that, stocks are kind of rallying over the last couple of days. We'll have a look at that in a minute. Oil inches higher as Middle East tensions heat up. Oil prices edged higher on Thursday, concerns about escalating conflict in the Middle East, with more attacks on Gaza and on shipping in the Red Sea, even as a surprise build in US crude stockpiles cap gains. So surprise build in US crude stockpiles, but I'm not so sure the conflict in the Middle East is kind of much of an effect for markets at the moment or anymore. It is confined between Israel and Palestine in that region. Nobody else is really getting involved up until this point. So for now, kind of not making too much of an impact on oil. The attacks in the Red Sea, they continue. That could be an issue, but it's you're kind of bereft of fresh headlines as we await CPI a little bit later on. We can see stocks rallying across the board. You can see US equity futures, European equity futures, Asia Pacific equity futures higher across the board. You can see commodities higher across the board. So it's a bit of risk on trading to start the day. Come over to your currencies and you can see your Aussie and your Kiwi relatively strong to begin the trading session today. Yields slightly lower, and kind of interest rates lower is positive for stocks, positive for risk. So strong start to the day as we head towards CPI later on. Do these moves continue with any sort of aggression into 130 today? You'd have to imagine probably not. Markets will lie and wait in anticipation for the CPI print later on, which you can see here at 130. We'll come back and we'll talk, or you can see here at 130. Sorry, mixed up as where it was. Thought that's a Tuesday, but here we go. I'll come back to that in a minute. We'll have a look across the chart, so you can see the way markets are moving in the lead up to it. Kind of Monday, solid upside across US stocks. Bit of a pullback into Tuesday, and then dip spot again, and you rallied into Wednesday and continued on higher into this morning. And that is the same across the S&P, the Dow Jones, and the Nasdaq. The Russell's a little bit choppy, a little bit all over the place, with certainly the three major indices pushing higher aggressively to start the week. Well, start the week in the first half of the week. The DAX, the Euro stocks, having a solid bit of upside. The FTSE's a little bit all over the place. I've said that many times. over recent weeks and months. The US dollar is a bit sideways, not really playing ball, which makes me a little bit skeptical of that move higher in equities. You can see the US dollar doesn't really know where it wants to go. Aussie, Kiwi, Euro and Sterling, bit all over the place. Dollar Swiss, dollar CAD, dollar yen, bit all over the place. Dollar yen, bit of upside over the course of Tuesday and Wednesday. Dollar index a little bit sideways as well. You can see Bitcoin across here all over the place the last couple of days, but if I bring that back to a little bit higher time frame chart, you can see Bitcoin has been rallying aggressively for a while. Yields not doing too much, taking a little bit of a turn lower today, but ultimately that's sideways, and that keeps the US dollar sideways. Oil, a little bit all over the place. Yeah, it was up, down. That build on inventories yesterday, slightly lower. So that's why I said you kind of got to be careful with those headlines. Kind of little bit, just say something to suit the narrative, which is a little bit tricky for a trade when you're trying to trade based off of the research that you do. If the research you do is just journalists talking for the sake of talking, makes things a little bit more difficult. But equities higher at the moment, US dollar mixed, yields mixed, which means this move higher for equities to be off the back of a rally into CPI makes it a little bit difficult to wrap your head around, as you would expect the US dollar and yields to be moving lower in line with that. Not much economic data this morning. Also not much tomorrow morning apart from some UK figures. So Europeans a little bit of a couple of days off, really, to be fair. Core CPI, obviously core CPI month over month, year over year, and then the headline figures and the month over month as well. Core CPI expected to remain somewhat sticky, a slight bit sticky at 0.3% for the consensus. Year over year 3.8%, so that is still too high. The Fed do want to get that lower, which is kind of, why I'm talking about bets for rate cuts slightly waning. At the meeting back 13th of December, off the top of my head I think it was. Markets had gone in and the Fed had said 3 potential rate cuts over the course of this year, and then the market take that as okay, let's price rate cuts in at every single meeting next year. So it was a bit overcooked, that move back end of last year, considering that inflation is still not where they would want it. But I think what's interesting though is this CPI print, 0.2% for the total rate of inflation. Total rate of inflation year over year expected to tick higher. If that fails and this goes back to 0.1 or even 0, and this comes back to 3.1 or even 3, again that further reinforces the fact that they will cut interest rates. Does that mean they will cut interest rates more than anticipated? Or on the flip side, that then pushes higher, and you think to yourself, well, that kind of reaffirms the fact that we're not going to get 6 or 7 rate cuts this year. I only get the 3 that the Fed have initially said. So we can't really do too much for that now. I can't imagine markets keep moving too aggressively in the lead up to it, but we'll keep an eye over the course of this morning's session. Jobless claims kind of take a bit of a backseat today at 1:30. But main focus of attention, US inflation. We'll keep an eye on that at 1:30. See how markets move in the lead up to it, and we will update a little bit later on in the aftermath.